Hey guys, how's everybody doing out there? I appreciate you all for being here. I was just looking at the SPY. Let's check it out together. All right, so here's what I was looking at. I know this chart's a mess. Now, this is a 30-minute chart of the SPY. You could see yesterday we closed right there. Then we had a gigantic gap overnight. Trump backed off on the tariffs. I didn't hear I'm just telling you what I read on Twitter that or it's somebody's analysis that he's decided to pause even on the China stuff. And he made some kind of announcement yesterday. But anyway, that's the way the market's taking it. That the saner people in the administration, Besant and other people got through to him. So we'll see. But now is the tariffs the only problem the market has right now? No, it isn't. But it was one of the main problems. But in any event, what I look at this big at 560, we have a huge high volume node where the market trade was real comfortable trading for a while. I'm thinking that's where the bulls are trying to get it to. But also there's a bearish gap up here right around the same place where I would expect sellers to be. What I'm looking for is probably a rally into here somewhere, maybe even all the way up to 560. Then possibly, if we do get a pullback, I would expect it. And then there's buyers down here possibly lurking from yesterday's gap between 520 and 530. So rally into here, pull back into here. For me, that would be totally normal. And then of course the bulls are going to want to take the next after they do that, they're going to want to move up and take the next highest trading range out, which would be 573. And then eventually they're trying to work their way all the way back to 600, but 600 seems like such a long time ago. All right. So let's do this. Let's put on a daily chart. Wanted to show how far we are under the 200-day still. The 200-day is at 570. So we're still two more trading ranges away from it. We have to get to the trading range at 560. And that means getting through this bearish area between 550 and 560 first. And then there's another area at 570. So anyway, but the good news is though, that could be a face ripping rally. We sit, if we do rally to the 200-day, even if we fell there, if it's a that we could go there and then bull trap people, and then fell there. But in any event, it should be interesting. I'm glad it looks like the tariffs for now are behind us. I would expect buyers to be, if we do get a pullback into yesterday's gap, I'd expect buyers to be there. And then if it goes any lower than that, I would think that maybe the market doesn't believe whatever it was that got announced yesterday. But as long as whatever got announced yesterday is the latest news, I'm hoping that this latest gap between 530 and 530 and 540 will give us some kind of tradable floor and some type of something to trade against. And also, we could also some charts and some time frames, it looks like we tried to make a head and shoulders bottom also, not in this one. All right, so and I guess we can thank Bitcoin for it. We have this was a Bitcoin led rally, so maybe people were saying that Bitcoin decoupled, and those were Bitcoin people that were saying that, and that may be so, but I'm going to say a counter hypothesis is the Bitcoin bros are the ones that, not only the Bitcoin bros and people like Besant are the ones that got through to Trump. The people that trade Bitcoin saw that those people were winning the battle and anticipated it ahead of time. But when those people got through to Trump, it was probably best for this sector of the economy. I mean, obviously, the market thinks it is. Look at this. We talked about this wedge forever, and we actually usually you go with the first way you break out of the wedge. And back at, of course, in April, we broke out bearishly. But then we went back and retested it and went back to the other side of it. So that, there was, that looks like especially now, not at the time it did, especially now, it looks like a gigantic bear trap. In any event, it always overcorrects both directions. So now we're overcorrecting back the other way. All right. So let's look at some other stuff. We've looked at enough charts. Hey, Mark. Hey, Grateful Trader. Hey, remind me, and we'll look at that stuff later. Remind me about that stuff you asked me in Discord this morning, and I'll take a look at it later. I've already forgot what it was, but we'll take a look at it. All right, so let's look at the model portfolio. Okay, so these are I guess that's how it's performing today. Let's start with the allocations. All right, here's the allocations of my real money model portfolio. So it's supposed to be about 4 of them are supposed to be around 20%. But anyway, but they vary a little bit. GPTY is 25%, ULTY is 22%, GDXY is 18%. It's supposed to be 20. The 3 of those are supposed to be 20, but we're coming up on the end of the month. I'll probably rebalance here at the end of the month, maybe buy something new. YQQQ, YQQQ is only supposed to be 14. So I guess these 3 are 20. This one's supposed to be 15. So that's right. And these are supposed to be 5. So we have YSPY at 5, TLTW at 5, XOMO at 3.91. And these are other ones. I just have some fractional shares. I don't understand how AMD. I think there's something wrong. There's no way I have 3 up. Maybe the fractional shares have built up. I don't know. All right. Well, whatever. So here's how they're performing today. So GPTY, and that's not only how they're performing, it's how they're performing for me, for my allocation. So GPTY makes up 24% of my portfolio, and it's earning me $1.40 right now, or 140 basis points, and it's a quarter of my portfolio. So what we can do is that tells me that GPTY is up 5.6% today. Are you freaking serious? Do you see how I did that? Because if it's making me $1.40 and it's only a quarter of my portfolio and it's making me 1.4%, that means it's up 4 times as much as that, because I only get credit for a fourth. So, but anyway, let's check my hypothesis. It's pretty early in the morning. Maybe that hypothesis isn't right. Some of my hypotheses don't work out, but let's check that one. Yeah, and that one did work out. We are up 4.4%. This is live. The other one, Google's delayed. But yeah, wow. Nice job, GPTY. You got to love that. All right, so that helps all model portfolio out. Unfortunately, my hedges are hurting me because we can do the same thing with YQQQ. So well, it's too hard. 15's a hard fraction. GDXY makes up a quarter of my portfolio, and it's down. It's costing me 43 basis points. It's really about 20%. So I can multiply that by 5. That means the 43 cents times 5 is about $2, right? So that means GDXY is down $2 today. Yeah, I know you guys didn't tune in to figure out how to freaking back into math equations, but that's just how my brain thinks. And sure enough, it is. All right, well, it's down 3% today. Anyway, but you can see how that works. That might help you if you didn't know. That's literally and that's how you make or lose NAV every day with your allocations. Today, I wish I would have had a little less in YQQQ. YQQQ is killing me. It's costing me 47 basis points of return. It negates most of ULTY's upside. But in any event, that's why I have GPTY, and that's why I have some other bullish ones. YSPY's making 9 cents. TLTW's making 7 cents, and something's wrong. I don't even like AMD. How's AMD that? Anyway, I need to look at my account. I take that back. I'm going to wait till the end of the month, and I'm going to make some adjustments. AMD's done. I think there's just some fractional shares that are building up because it's on drip, but AMD's done, and I'm going to reallocate to I don't know what yet. I don't know. We need to talk about it. we'll talk about that in a little bit. But anyway, so there's GPTY, or there's my model portfolio. But I guess now let's go over here to the buffer report. Probably should have checked out the buffer report first. I wouldn't have been surprised that everything was up 99%. But I'm sure LFGY is just freaking killing it. Look at that. I mean, I don't even know what you say. I mean, BitDeer, BitDor, I don't even know what that is. Up nearly 10%. Anyway, not a whole lot to see here. I'm sure it's the same way ChatGPT. All right, look at that. Holy cow. Would you look at that? Man. All right. Well, anyway, but we've had some really bad days. This is what, this is why the market's highly volatile. What's the VIX at right now? The rule of 16. You divide whatever the VIX is at by 16, and that's the average daily move. For a while, we were getting 3 and 4, 5% average daily moves. Now the VIX is settling down, and we're still getting big daily moves, but we should start getting smaller ones. All right. So anyway, everything's up. Look what ACMR. Okay, up 9.4%. I mean, you got to love it, right? All right. What else you guys want to look at? We can look at some of your stuff now. Oh, yeah. Okay, clause. Well, first of all, let's talk about triple witching. Triple witching, and they even have quadruple witching, but let's put it back on the charts. You guys don't have to look at me. That Bitcoin chart is just beautiful. I mean, yeah, it's just a beautiful chart. Triple witching. Triple witching is something that happens once a quarter. When you hear people talking about triple witching, they're usually option nerds or volatility nerds. And what they're talking about is they're talking about the Friday that options expire. The reason it's called triple witching is 1 week out of the month, the third Friday of the month, and also once a quarter. So the third Friday of the month, once a quarter, that's quadruple witching. Actually, I'm sorry. Triple witching is once a month. Once a month on the third Friday. You have index options expiring. At the same time, you have stock options and something else, futures options. You have 3 things expiring at the same time. Index stock, and is that index stock and future? I used to know, but then quadruple witching. Oh no, and it also has to do with how many, because quadruple witching is also the end of a quarter, and that only happens. So you have quarterly, it has to do with the expirations. That's what it is. They're referring to the expiration. So, yeah, so quarterly. Anyway, but all it means, what people try to do with it is people anticipate a lot of volatility right around it. I think the most famous triple witching was in March of 2020, or that was a quadruple witching. And what will happen lots of times is, I'm not going to go look at March of 2020. What happens lots of times, what I've noticed with option expiration, is the market trends one way. We have a big down move, and then an option expiration will call the exact low or the exact high. Now this low was on the 7th, so it didn't happen. But like if the low would have been on the third Friday, and it happens a bunch of times that way. Anyway, people just look at that for, it's one of many things to look at. Another way, people anticipate extra volatility that day. So if you're day trading or whatever, you anticipate wider ranges. Because the other thing is, some options expire in the morning. SPX options expire in the morning. Those are big index options, of course, that commercial institutions and stuff use. They expire at 8:30, which is the craziest, stupid thing ever. But then options on the SPY and normal options on Apple and equity options expire that evening. But anyway, it just means those days are crazy. Triple witching days, some people just don't even trade them because it's too unpredictable. All right, so that's my take on triple witching. What else you guys want to talk about? Yeah, quarter option expiration. Next one's June. So that would be quadruple witching, means when it's the third Friday and you have all your normal monthly expirations. That's triple witching. And then if it's third Friday and in June, boom, then you have quadruple witching. Anyway, so just expect extra volatility. And like I say, sometimes the market will turn on those points on option expiration cycles, just for mechanical type reasons that I don't even understand. All right, Grateful Trader wants to talk about. Let's look at clause, I guess. There's that MRSK that you asked me to look at yesterday, Grateful Trader. So the thing on these, it's great. I love it. It's the coolest thing ever. But there's a jillion other funds just like it. If I wanted a fund like this, I mean, I don't know anything about toes. I mean, it's the greatest idea ever, but I would probably use a product with one of Jay's products or one of, or Simplify. I'd probably use HEQT, but or something from Innovator. I mean, but heck, I don't know. What I'm saying is there's so many of these hedged equity. I'm having a hard time differentiating them. I like Innovator because they're the only ones I've seen that have the zero loss, where they can cut off all the loss if you hold it 1 year or 2 years. Now these other funds don't do that. They just ladder and they just do their best to prevent loss. But that Innovator, has the total loss. I think that total loss prevention, I think that kind of sets them apart. Now on to clause. CLOs. Yeah, I've looked this up before. It's CLOs. It's a CLO fund, whatever CLO stands for. I'm just forgetting right now. Collateralized loan. I'm sure you guys will tell me in the comments. All this stuff right here that has percentage things, those are bonds and fixed income type stuff that pays, which is great. But so I'm just saying this looks to be like a fixed income type investment just by their top holdings. It's if you want exposure to whatever, that part of the market is, it looks like it's great. I mean, it was down about 15% from high to low, just about like the market was, and it's bouncing back hard, just about like the market. So I don't really know much about that one. Eldridge Triple B CLO. I just am trying to blank on CLO, whatever that means, but Triple B's the credit quality. That's just not my. It's just not what I like. There's a jillion things that can give you that same payoff, but anyway. One thing, those let's check how much it pays you, the yield. I mean, 8.8%. It probably for this type of investment, I bet you it is a good one. It's a high yield. I've looked it up before. I've heard of it. All right, so the SPY-U. Now I don't on these. Let's look at this. So is this one of these quadruple leveraged? I thought Jay was saying they no more quadruple leverage. They weren't approving them. I thought they weren't even approving triple leveraged anymore. But maybe this has got grandfathered in. This has been around since December of 23. So maybe it was in the good old days when they would approve anything. I've heard there's also something called I think it's maybe Canadian 4Qs or maybe 4Xs, and it's a 4X S&P or 4X. I swear I've seen that before somewhere. Anyway, SPY-U. Okay. No, it's not going to get really 4 times. I don't think. But I don't know. Maybe somebody in the comments knows. I don't mess with these that much. Sometimes I use TQQQ, and I like that one, or SQQQ. I mean, but you just have to read the prospectus, and they describe it better than I can. I could go pull up the prospectus and read it. It is leveraged to the daily results, and it is designed to get 4X the daily return. But there's a big caveat. There's no guarantee that over any period of time longer than a day that it'll equal 4X. In fact, it won't equal 4X. They pretty much say they have verbiage to that extent in the prospectus. If you want to read it, I mean, what's the matter with what's the matter with the triple leverage? I think 3 times enough. 4 times. I mean, let's see what it did. So, I mean, it went from 25 to 55. It doubled in a year and a half. I mean, that's good. But you can see the other side of that is you're back to where you started at a year and a half ago. That's that 4 times leverage working against you. You're back right now because you had to use leverage, which there's nothing wrong with leverage, but I'm just saying, but here's what happens. Here's the other side of it. You're back to the same place as, December of 23. So I was trying, maybe we should pull up a SPY chart and see what the SPY was in December of 23. There's probably a better way to do this, but what I'm trying to illustrate is this a huge give up. Because the SPY in December of 20, and we know that. I mean, that's it's like these people that talk about the high yield funds and they compare Tesla to Tesla and they say, man, this thing sucks. It doesn't get any, look, Tesla does so much better. And of course we know that. So this is a little bit like saying that. We know that, but I'm saying, but you just, if a guy would have just bought this and not messed with leverage, would have gone from 386, he'd still be at 542. I mean, but the guy that messed with leverage is from 386, but he doubled though. This guy never doubled, right? Or okay, 386 to double 386 would be like 7 something. So this guy, he only made 6. So this guy never quite doubled. The other guy had his money doubled at the highest point. So that's the leverage working for you, but he didn't have 4x the money, right? I mean, that'd be too good to be true. That would be like free money. But he did from high to low, he made about a 50% premium. But from low to high, he's given it all back. So that's why I don't mess with, that's one of the many reasons I don't mess with leverage. The other thing is if you're an option trader and grateful trader, you know how to trade options, right? If you're an option trader, you can get all the leverage you need. I just use ETFs for long-term investments, but you can, if you want to, like, let's do something like this. I saw this chart today. What's going on with this? This chart, if the tariff thing really is over, the other thing is I'm thinking Elon's done at Doge, and I'm just saying if that stuff's behind him, maybe he can concentrate more on Tesla. Tesla is low. Maybe it'd be a good time. I might even start doing something in this. Poor man's covered. I don't know. This would be possibly a good time to make kind of a long-term play in Tesla. Now I showed you guys one. We were just joking about it. But it was right. It was a few weeks ago. I said, well, wonder if a guy did a poor man's covered call. I think, didn't we talk about that? I thought there was a Tesla trade in here, but I wanted to talk about some of these trades anyway. So let's look here. But I thought we did. I just said, just for fun, let's just see. And man, that trade. I said, just for fun, poor man's covered call. It's up $1,400. I mean, gosh darn it, why didn't I do this one at the time? I mean, okay, now what's happened is my short has expired. It's a paper trade. So now I just have the long, but I would need to go in and sell another, option. But this thing cost $8,400 to put on initially. If you guys remember, but this option we sold an option for $625. In like 10 months, this thing's going to pay for itself. So, but the real thing you're hoping for is the price to move up. It's an option strategy, but it's also hoping for the price to move up. But anyway, okay. So far, let's just show if we were really doing this. But the other thing is Tesla volatility is just insane lately. Watch this. Sell call. And we're going to switch the expiration to week after next. Oh, yeah. Then we're going to go out of the money. We're going to go like a 30 delta. It's a 24 delta, whatever. So we get some upside before we so we've already made $625. We're just trying to pay for this. This is our stock, this 200 call. This is how poor man's cover call works. Just trying to pay, or deep in the money, just trying to pay for this. It only costs a lot of money, but every week we're going to knock $600 or $700 off. It's the idea. Or 400 this week. I don't know. We'll just paper trade this, see how it goes. But the thing is, it doesn't. We know how it's going to go. If Tesla's price will go up, this is going to look great. If not, it's going to do poorly. But it would have done poorly if we would have bought stock in Tesla also. And I'm going to say this is going to do better than the stock. I should have compared this to stock, but anyway, let's just save this and we'll follow this on the morning show. I guess, how do I do this? Okay, so I'm going to call it second rollout. They should keep track of your rollouts. They really don't. First was 625. I just usually keep track of the rollouts here, but in the comments, override existing trade. So override existing trade. What am I thinking? All right. But yeah, but it comes down to, you know, option trading's great and stuff. And when you sell options, yeah, you can make that income, but at the base of it, you need a stock that'll go up or that at least will not crater on you. And that's sometimes easier said. It seems like it'd be easy to find, but it's easier said than done sometimes. And I screwed this up somehow. Anyway, I'll come back and fix that later. All right, guys. What else do you guys want to look at or talk about? I was thinking maybe we could look at a Google trade or something. I mean, Google has earnings tomorrow. The market seems pretty firm. I'll probably do one in real life, a Google trade. I mean, Google has tons of liquidity. What do you guys think? Google bearish or bullish? Hey, I'll do QAI and Hyde on a later show, Grateful Trader, so I don't take up too much time. But I could do that all day long. But I'm trying to show you guys how to do it too. You can go to FinViz and you can look at what they're holding, and then all you need to know is what they're holding and what yield they pay. It has a trailing 12-month yield. You got your yield, you got what they're from that. That's all I do. I look at that. Then I look at how their assets under management to make sure it's not a tiny fund getting ready to go out of business. Collateralized loan obligations. Yeah. I was saying collateralized loan, something else. Anyway, CLOs. Yeah. Okay. Now on HEQT, is HEQT like SPLV? I don't know. HEQT is just hedged equity. They sell calls to buy a put spread, or to buy puts, or sell a call spread to buy puts. So there's two ways to do it, but they do one of the two ways. Let's look at SPLV really quick. All right, SPLV. Oh, okay. Well, that reminds me of something else I want to talk about, though. But let's. Okay. No, this is a fund just by looking at the name. It's low volatility. They make up they probably use the S&P 500, but they overweight the lower volatility stocks, or maybe they cut the higher ones out altogether or something. Anyway, it just gives you less volatility. It's just what it says. But it's going to do. But in a raging bull market, you're going to leave money on the table, something like this, because you aren't invested in NVIDIA and Planeteer. Okay, but anyway, you guys know that. Speaking of low volatility, though, it's something that just came out today that I saw, and I think I saved the tab because I wanted to show it to you guys. Is it no? Now I forget the symbol. It was something like Top C. Yes, I remember it. Okay, Top C, and I just saw this come across today. It's like 6 days old. Similar concept. I was thinking Top C, and it's called a 3% cap. You know, what the heck? What does that mean? It sounds cool. I was thinking it had to do with, excuse me. I was thinking it had to do with option premium or something. Because, of course, that's all I think about is option premium, right? But it doesn't. What they do, it's kind of like an equal weight fund. You've heard of these equal weight funds, QW or QEW or QWEW. Anyway, is a Q equal weight. There's a SPY equal weight. All they do is they don't let that, it prevents over concentration. So now what this does, it's a similar concept. This lets things grow. It lets fund, the S&P 500 is cap weighted. So this is a cap weighted index, just like the S&P 500. However, it stops the cap at 3%. So when NVIDIA or Apple got past 3%, all they do is it stops the cap. They rebalance once a month or once a quarter. I can't remember. I just read the prospectus, but they rebalance, I think, once a month. When they hit a cap, they distribute the extra cap to the other shares, evenly to the other shares. So that's also a good thing, a good kind of hedgy type stuff. Um, but I would say Top C and SPLV are similar. But I would not say that SPLV is similar to whatever the other one you were asking about was. All right. What else? Hey, Blackwater, how you doing today? I appreciate you being here. Yeah, Planeteer's a monster. So what I'm thinking, another thing, I always try not to be political. At politics just rules so much stuff, but the tariffs and stuff. But anyway, if they really are behind us, and what I'm hearing and stuff, they are, and I hope I'm right. And if Elon's really getting out of the Doge business, I'm hoping he'll kind of get back into, not that he can't help in government and not the Doge, I mean, I'm not wishing him ill, but I'm saying, but I'm wishing, it would help Tesla out, I think, if he was in Austin. I used to see his G6 flying over my house all the time. I'm right on the flight path between Austin and Houston, for that matter, and people flying to LA. Or I get flights flying to Phoenix and Las Vegas too. It goes right over my house. And I'm about 5 miles from the Austin airport. So it's low in that G6. And I have a little app. It rattles my freaking house. But he has it blocked, but you can block it, but you can still see it's a G650 flying in that came in he's always coming in from San Jose or from Brownsville. He flies in from Brownsville a lot when he's down there at SpaceX. Haven't seen him in months. He needs to get back here. Anyway, I think it'll be good for Tesla, which would be good for the market. So, and I'm just hoping that maybe this little, first quarter episode is behind for now. And I'm just, we get back to some mean reversion and stuff. Market still has problems. We're still well under the 200-day. We're still facing a recession, might even be in one, blah, blah, blah. I mean, who knows on that? But they've been saying that forever and hasn't stopped the market from going up. Remember, 99% of, well, it did in 2022, but we never hit the recession. But, I think it was 2023, 95% of economists said we're going to go into a recession. And the market went on to make new highs. Anyway, so we'll see. We shall see what we shall see, but it's definitely getting interesting. All right, so CEFS. So I'll give you another tip. I can tell a lot just by the symbol. So I'm going to tell you without even looking at that one. That one's fund to funds that invest in other closed-end funds. So let's go see if I'm right. And I knew that CLO was just the same thing. It invested in CLOs. I just can't remember what a CLO was. Closed-end fund. SABA, closed-end fund. All right. Well, that's a good looking chart. Hit the 200-day, leave a rejection tail behind me. Technical trading chart. I mean, my gosh, perfect 3-bar revert. Or I don't know. That's a tried and true pattern, of course. It doesn't always work. I mean, you see it other times when it didn't work. But anyway, it's a tried and true pattern. Well, and especially when you add in the high volume. Anyway, there's all you need to know. It pays 8.3. Here's the 1 year. This right here is just NAV return. See where it says return? They don't tell you this, but it's important to understand. This column is NAV return, this is fine. This thing doesn't have any problem. But this column over here, when you're looking at something that's a high yielder, this column will always be like -20. But you look at like return 1 year and it might be -20. And then you look at performance year. Here, the word performance is the key. It's how your account is performing, because you have to factor in the gigantic dividends you've got. And lots of times you'll see on the high yield ones, you'll see it might be -20 here, but then performance a year might be +10. And guess what? That means that it pays 30%. You're probably looking at something like APLY or, something like that. So this one, though, doesn't have any of those types of problems. Its actual NAV performance was 12%, and its actual total performance was 7%. Anyway, so this one's, but so then the other thing I'll look at is see what they own and then make sure you're comfortable owning this. This is a bunch of private equity stuff, closed-end fund type stuff. They have some GDX. What is going on with GDX today? Are you freaking kidding me? I mean, I guess I should have known that because we looked at my freaking portfolio where I have GDXY and it's getting killed. But yeah, GDX pulling back. All right, well, it's whatever. But that's all I do when you guys ask me to look at funds or Grateful Trader. That's the main thing to look at. Look at the dividend. That's his trailing 12-month dividend. One thing to be careful on is if it's brand new, it won't tell you it's brand new. It might say 1%, but you look, it's only been out a month. It might be a great fund. But if it's been out a year, whatever it says is what it paid in the last year. So I just look at that. And then the other thing you really want to look at, you want to make sure that the people are buying it. So I go down here to the fund flows. Over here on the right side is how much it has in it. It has 250 million in it. Now, lately people have been selling it. I mean, but there's been big sales. These are big sales down here, but the assets have still kind of crept up. So big sales and small buys, whatever. But FinViz will tell you in a glance all you need to know. And then of course you can have but the top holdings mean everything too. On this one, it's Newmont Mining, another mining company, of course, because it's GDX mining, Barrick Gold, but it has the percentage. It has everything a person needs to know right here. Yeah, closed in funds. But yeah, Planeteer's great. Let's look at this. Let's look at something here. I should have done this yesterday. I want to do something bullish in Google. I want to do something bullish because I don't want the market to leave me behind. But, oh my gosh. I should have done it yesterday. Let's see how I did show you guys. We did a pairs trade the other day on paper. I want to see how it's working out. Remember, it was long IBIT, and then it was hedging with the IWM. And the IBIT part is up $164, but the hedge is down 100, so it's only up $64. But it wasn't a real trade. It's just on paper. I was just trying to demonstrate. But I might still be all right, as you guys can see. I mean, because I'm looking at 55, I'm looking at, I know that's pretty aggressive and it seems crazy. Yeah, with only 2 days left, it's not happening. But look at the profit and loss graph right now. So this type of trade, and we don't even have to talk about what's called or whatever, but it gives you a profit and loss like stock. Right where you want it like stock, right where it's most likely to go. If it goes way past there, yeah, you make a little less, but that doesn't happen that often anyway. I like these types of trades for huge asymmetry. Now, because you pick a target, my target was 55 on IBIT, and I didn't just dream up the target. I'm looking at, I'm trying to look at stuff that makes sense. But let me show you what I was seeing. Looks like the market's selling off. I need to have the market open down here, so I'm talking to you guys. It's still fine, though. It's probably selling off right to set up a perfect place to buy. All right. On IBIT, for some reason, the liquidity thing, I don't know, the stuff on the side where it shows the volume's not working, but well, basically 55 is a huge freaking, that you can see, you can just eyeball it. And you can see that 55 for a long time, people are comfortable transacting business there. Bulls were trying to get it there. They almost got it there this morning. We still have 2 days left. Maybe it'll still come true. Anyway, I like those kinds of trades, though. I hope you guys do, too. Okay, good day to buy GDXY. I'd be buying it if I didn't already have. Yeah, I know, and I was just griping because it gapped down. If you looked at where it gapped to a prior place where there ought to be buyers, and it's probably a great place to pick it up. Probably a great place to pick it up. But I've been reading stuff on Twitter to wonder if now that the little gold run is maybe behind us, and maybe. I'm not saying I'm going to sell GDXY, but maybe with fresh money, I'm looking at something else. I don't know. We can talk about it in Discord. You guys want to hear something funny? There's 9 of you guys here. I think this is a funny story. I'll listen to the story, then I'll let you guys go. So I'm writing a script last night. I discovered there's a new, you guys might be interested in this too, because it deals with high yield ETFs. Okay. There's a new ETF out there. Let me try to find the conversation. Oh, I know. It wasn't Grok. It was Claude. And I'm using Claude to help me do research, right? All these other influencers, everyone uses it. It's the whole thing. Hey, you can use AI and it's, and it makes it where you can do like 3 guys work or whatever, and use AI and make $1 million this year. AI is the greatest thing ever, right? And I like using your tools and stuff. And AI is just basically Google on steroids or anyway. So last night I'm using Claude and I discover a new fund. And you guys are getting a sneak peek on this because this video is not out yet. The new fund's name is SBAR. It's a Simplify fund. You guys have probably heard of it. I don't know. Simplify Barrier Income. It sells barrier options. Barrier options are different than regular options. Retail can't sell barrier options. Barrier options are something really cool I've heard about for years. I've read about them in books or things hedge funds use. In any event, and also who really uses them is hedged equity funds, actually buy them to hedge their equity. But this is selling a barrier option. Anyway, the other thing is I wanted to make sure that my information on barrier options was correct. So I'm using AI to explain the difference between barrier options and regular options. So anyway, okay, but the next step is, so then I go up here to ETFs and I see that they have another one. Check this out. I see that they have another one. Well, somewhere it was introduced, there's right next to it. They have another one and it's called XV. Watch this. I was like, what the heck is that? There it is. I was like, you gotta be kidding me. Is it a VIX one? I mean, XV, and it was just late last night and I was trying to get this video done. I was like, gosh, this is awesome. Target 15. I'm all about this. So then I said to Claude, I said, hey, Claude, I want to make a video. Let's compare and contrast both of these, and then explain how a barrier option works to somebody that only knows how regular options work. Claude did a great job. So I'm reading through what Claude did. And Claude tells me, watch this. Claude's like, you sometimes you have a buddy, at the bar, and he's talking about something that you know a lot about, but he doesn't know you know a lot about it, and he's bullshitting. He's drunk, and he's bullshitting or whatever. That's what Claude did to me last night. Claude freaking told me that fund VX. I'm trying to find VX. Okay. Simplifies targeted. Okay, right. All right. This is the corrected one. This is after I corrected him. He was telling me that the VX, they sold VIX option, or they sold VIX futures, and and just, I'm trying to find it, just totally made it up. And I'd already read the prospectus. And so I said to him, I said, hey, I called him on that. I said, did you just make that up? And he admitted it. He said, yes, I shouldn't have done it. I don't know how to go back to my history and find it. That'd be a lot more interesting. I may even make maybe this is it. All right, hang on, check this out. This one is just S-bar, but I said, because that's the one person not to joke about VIX stuff to. I'm giving anything for a VIX fund. I mean, I know about every VIX fund that's out there, and he happened to try to tell me it's going to sell. He took the Target 15 information because it's called Target 15. He said they're going to sell VIX futures and pay you a Target 15% yield. And so I said, where did you know that? Give me a source. I said, I would love if that was right. But I said, I believe that they're actually, it's Target 15. And I had to tell AI, I said, the reason it's XV is because Target 15 for the Roman numeral 15. I sent that message to him, and Claude says, yes, you're right. I'm sorry. I shouldn't have made that up. I didn't know the information. And I basically said he didn't know the information and made it up. I mean, so anyway, it's a big eye opener. And I've been using Grok a lot. I like Grok a lot more than Claude, but I cannot believe Claude it's just like a buddy does to you in a bar when he knows, anyway, I thought it was funny. All right. Yeah, but it may be a good day to buy GDXY. Who knows? All right. Well, I did have 9 people on, and I told my story. Now I have 10 people on. At least I didn't run people off. All right, guys. Well, anyway, I'm going to go find the chat script and turn that into a video because it's hysterical. And Claude's a very polite person, and Claude admitted that he just admitted, no, you're right. He just admitted I made it up. I didn't know, and I made it up. But then he even said, I said, what's your source on that? And he said, well, based on there's other similar funds out there, and based on the name VX. I mean, that's the other scary part is he thinks like a person because VX felt like I did. I mean, it has something to do with VIX futures. Symbol for VIX futures is VX. So weird for an ETF just to have two symbols. But as a human intelligence always going to be smart, not always, but is right now at this point in time smarter than AI because my human intelligence told me it's called Target 15. XV is 15 in Roman numerals. That's what it means. And also, I'd read the prospectus really quick, and I saw that. Anyway, all right, guys. Well, I appreciate y'all for being here. I hope you have a good day, and I'll be back later. It looks like, especially if the market's fun to talk about, and there's more stuff to talk about. I wanted to do a Google trade, but we've been on so long. Maybe I'll come back on at lunch or something. And heck, it already is almost lunch on the East Coast, or it is lunch on the East Coast. It's 11:30. Maybe I'll come back at lunch on the Central Time Zone. But yeah, I didn't know how bad AI was at fabricating and hallucinating. I mean, like I say, it's like it's insidious. Like when you have a friend that tells a lie and he gets caught. I mean, because a good lie has a little bit of the truth in it and kind of makes sense, or not really so much a lie, but just somebody that's a bullshitter. We all know those types. Anyway, all right, guys. I appreciate it. I appreciate you guys for being here. But yeah, so check your sources out there, guys. But I'm going to get this video out. This SBAR, these funds are good funds. That's the bigger thing. Or they have lots of potential. Simplify is a cool company. These funds are going to give traders or investors and allocators another interesting option in the liquid alternative space. I thought about Tom when I saw these funds, and some of you guys in here that are that really are into the liquid alt type investments, the more sophisticated stuff. But anyway, yeah. So I'm going to get that video out hopefully today. If I can get AI to quit lying to me. All right, guys. See ya.